Good morning, everyone. Well, the dollar trended largely lower after U.S. Fed Chair Janet Yellen emphasized the Fed's flexibility on when to raise interest rates, rather than reiterating her previous comments that they could start raising rates 6 months or so after they end quantitative easing. At the same time, she also said that the causes of low inflation are only temporary, and the Fed expects to meet its goals for inflation and unemployment by the end of 2016. That comment, plus stronger than expected industrial production for March, and comments in the Beige Book that indicate the economy is indeed on track, sent the implied interest rates on the Fed fund futures up around 5 basis points in the long end. In short, interest rate expectations moved higher regardless of Yellen's comments about flexibility. Nonetheless, the dollar was generally lower against both the G10 currencies and the emerging market currencies. I think investors should remember that while the Fed nowadays gives forward guidance, it usually leaves itself some wriggle room in case the economic situation changes. With tightening, I think the FOMC has a schedule in mind and will probably stick with it, so long as members believe the economy is on track to meet their forecasts. That should eventually start to underpin the dollar as the moment of policy turning approaches. Especially, note that the Fed fund futures are now forecasting that Fed funds will hit 1.8% at the end of 2016, when the Fed expects to reach its economic targets. This would still be a negative real Fed funds rate, which is quite stimulative historically. The average real Fed funds rate, including periods of recession, was 1.7% before the 2008 financial crisis, which would imply a nominal Fed funds rate closer to 3.7% at the end of 2016, or almost double what the market's forecasting. I expect the market to continue to revise up its expectations for U.S. rates, and that will support the dollar. Today, we have a relatively light calendar. Initial jobless claims are expected to rise, but the 4-week moving average should continue to fall. And the Philadelphia Fed Business Activity Index for April is also expected to rise. I think those two indicators could support the dollar. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.